600 transactions across the United States. All of our investments are in the U.S. So I'll tell you a little bit about our company. So we founded in 2007. We've done about $9 billion total deals within the country. Most of those have been focused on hospitality assets. So we've taken that and we've used about $2.5 billion of equity to do that. That's what we currently manage. We have about 2,400 people that work at all of our hotels. We have about 250 people that work in my corporate office. We historically have done deals on an individual basis, and then we started to raise funds, and now we're on our 12th fund. So we have individuals invest with us, we have large institutions invest with us, so we're very diversified on the assets we invest in, but also the clients that invest with us. We got as vertically integrated as possible, so the next slide I'll show shows what we do. So we acquire assets, we develop assets on the hotel side, and we lend to other people on the hotel side. So those are our three pillars of our company. And what we did is we produced different service companies to support those investments. So we have a property management company, so we manage all of our properties in-house. We manage about 100 hotels today that we do day-to-day operations. We have asset management in-house, we have construction management in-house, we do all of our loan servicing in-house. We also have a captive EB-5 program in-house. I know a number of people are here looking at the EB-5 visa program. We have investments that qualify for EB-5, and also we have a captive EB-5 group within our shop that helps go through the process of applying and also getting through all the regulations of the USCIS. If you look at the red box there, the development and the lending side is what qualifies for EB-5. So everything we do has got, on the development and credit side, we can do some deals that are non-EB-5. We also have deals that are EB-5 eligible. So those are the two buckets that would be qualified in this particular case. As I mentioned, you've heard from a number of groups today about track record, right? So what is the group you're investing with or considering? What have they done? So if you look at our company, as of the date of this slide, we've done 660 investments across the U.S., which in our last 17 years is, we're very active in the U.S. It shows our various types of deals that we do. So we do loan originations where we actively go find borrowers and lend money to them. We do note purchases where we buy debt from banks. We acquire assets and we develop assets. And so we've created, again, this universe where we see 360 on the hotel side in the United States. So we see deals from groups like Marriott to deals from an individual that's trying to transact. So we see the entire spectrum. And it's important to note that when we do transactions, it's really through Hilton and Marriott primarily, where we're the franchisee of these companies, of these two companies, and we build the hotel and we manage the hotel. So it's a little unique in what we do. So if you look at the types of investors we have family offices, registered investment advisors, money advisors, institutions. I myself have put in money into every deal that we've done. Same with my two partners. We've invested over $100 million of our money into our deals. With retail investors and obviously our friends and family, that's how we started. So as you speak to groups and as you look at our group, what makes us unique is, again, we see the entire playing field and we are very vertically integrated. And that's a little unique is that when we do EB-5, it's EB-5 for deals that we sponsor. So we found the land, we're doing the construction, we've got the brand from the Hilton Marriott, we're going to manage the property, we'll sell the property, we go through the entire spectrum of all of it. So we're not looking for third-party developers or sponsors to do that for us. When you look at, again, groups, we're a registered broker-dealer, so we're regulated by FINRA, which is our financial advisory regulatory firm in the United States. So we have regulatory bodies that regulate what we do on the capital raise side. So we have kind of the highest standard to uphold when it comes to capital investing. I mentioned we do EB-5. We also do transactions outside of our fund, or outside of EB-5. So we have a fund that we offer that's investing across credit and equity in the hotel space. To date, we've done about 60 deals in this fund. We'll probably do about 120 or so in this transaction. We're paid 11% per annum currently on the dividend, and it's a 3 to 5 year investment period, and those investments are all across the United States in debt, equity, and some limited development. So let's talk about the current environment. So you guys hear plenty of stuff in the news about what's happening in the U.S. with banking and everything else like that. So I'll give you some data on how the hotel industry is doing, how the banking environment is doing, and just how the market in whole just generally is doing. So inflation's been prevalent kind of across the world. Just after COVID, it's just been very prevalent. So with inflation rising, we've had interest rates rise. Interest rates have risen faster than they've ever risen before in the U.S. So what that's resulted in is banks have stopped lending, right, for the most part. So private lenders like us are lending money to most groups. Borrowers are having higher borrowing costs, so their interest expense is more expensive, which is causing some pressure. There's fatigue in the ecosystem. What I mean by that is that people got through COVID, it was challenging, and now the market is coming back, and now they're having another challenge of higher costs. So the property might be doing well, but their balance sheet has some stress because of the higher borrowing cost or just the challenge that they've got really too much debt, whatever the case is. The debt market, I'll have a slide in a moment that shows a lot of people borrowed money in 2018, 19, 20. That debt is coming due now. And you have to refinance, but there's no lenders to refinance. So it's a challenge with trades and things like that. And then fundamentally though, if you come to the US just like in India, the hotels are doing very well, right? Rates are up, occupancies are up, everything's doing very well. So fundamentally, lodging in the US is doing incredibly well. A few things have happened, right? So when COVID hit, some hotels shut down and never opened up again, right? Other hotels converted to housing, so they didn't come back again. So supply came down, yet everybody wants to travel, so demand went up. So it's been very lucrative for the general hospitality market. We've well surpassed 2019 occupancy and ADRs in most markets. So if you look at kind of this chart, it's a little busy, but generally, this is pre-COVID. This shows COVID. It looks at the yellow line is demand, the blue line is total revenue, gross operating profit, EBITDA, kind of profit. So you can see that obviously everything went down and climbed back up. We're above where we were in pre-COVID in pretty much every metric. So generally, the hotel space is doing incredibly well. I mentioned debt maturing. This is what's maturing. We have $1 trillion of debt maturing over the next 2 years across commercial real estate. Now, that's going to cause great transactions to happen, but also $2 trillion is not, or $1 trillion is not going to trade in 2 years, right? So the banks will extend, they'll pretend, they'll work things out. So it's just representing how much transaction volume there could be. Hotels, inflation rises, we can increase our rates. It's very simple. So if it costs more to do business, we can increase our rates. It's not like housing where you have a fixed amount every month. This is every night you can change the rate. Supply, this is the chart I was showing you earlier about how supply went down. So this is over the last 15 years. It's come down, it's come up, and it's come down again. So supply has fluctuated quite a bit in the United States. And this chart is demand. This is COVID. This drop right here is COVID, and it's jumped right back up. So let's talk a little bit about our EB5 program and some of the deals that we have that qualify in the hotel space that are EB5 deals. So the first one is in Palmdale, California. Anybody been to LA? So this asset is about an hour north of Los Angeles. It's in a market where it's got a lot of aerospace, retail, and education. So if you think about what drives business in this market, the gentleman before we talked about demand. And so demand here is you've got Northrop Grumman, Lockheed Martin, a large Edwards Air Force Base, so very big government business that's in this market in defense contracting that is pretty consistent in the US, so it's not going anywhere. It was very stable during COVID. The market held up very, very strong within the Confederation office. There's the current line and there's this expedited line. This deal would qualify for the expedited line because it's in a targeted high unemployment area. We, like others, we guarantee this deal. A lot of people have to mention what the guarantee is. So my company is guaranteeing the transaction. So in the event the deal has a denial or if the deal fails, we have a corporate entity that with $9 billion of assets. We are the one guaranteeing this transaction. So it's relatively safe compared to other transactions. Certain rules within the government, the USCIS program changed about how long the money has to be out there. Our program is 2 years after CO is the maturity, and CO means when the hotel opens. Hotel's under construction, so it'll be called 18 months before it opens, and then 2 years after that is when it'll be eligible to get capital back to you guys on this transaction. This deal is targeting 31 EB5 investors, so it's not a very large deal, and we do that intentionally because we want bite-sized deals, because our goal is to have the EB5 capital come in, and get the property built, and get to return the EB5 capital to you. That way, you get your money back, you get your visa, and it kind of moves on. And they're bite-sized deals, so they're not taking too long to build, they're not taking long to ramp up, so we can actually execute the business plan. This property is going to create about 450 jobs, so there's 14 and a half jobs per EB5 applicant, so very good coverage there. Like I mentioned, this hotel is affiliated with Marriott, so it's one of the largest brand loyalty programs in the country or in the world, and so we feel very strongly that this hotel will do well. We've invested in this market in the past, and this market's performed very, very well. As I mentioned, we are a hotel operator, so once the hotel opens, we will operate the property and franchise it from Marriott. So that's the first deal. The second deal is a Home 2 Suites. This is a Hilton property in Boone, North Carolina, which, if you're familiar with Boone, it's kind of on the western side of North Carolina, and it is a market that's driven by tourism and also by a college. A very large state university is in this market called Appalachian State University. This property is going to be the only hotel that's walking distance to the university. So all of its competitors are about a 1 mile drive, 1.5 mile drive. This is walking distance. So we think we have the best location. We have one of the better brands, and it's got very stable demand because it's a college. It's got a ton of tourism that happens in the market because there's skiing, there's hiking, there's various outdoor activities in this market that drives the year-round business here. We are partnering with the group. When I say partnering, we're financing the group that's doing this. So if you remember, we invest in the EB5 program in 2 ways. One is development, where we do the development directly. The other is lending, where we lend to other people that are developing. So the first example, Palmdale, we're developing. This example, we're lending to a group doing it. So we're in the first mortgage position, where the developers put their equity behind us, and we're providing the first mortgage loan to them. This property has already started construction, just like the other one. It's projected to be opened in November of 2024. It's 105 rooms, so again, it's a smaller hotel. The property will be built quickly. The borrowers close and pay us off in 2 years after the hotel opens, so again, you get your capital back relatively quickly. One thing that we did within this deal is that we give the borrower a $21.7 million loan, and in that loan, we put money beside the EB5 money. So there's $20 million of EB5 dollars and 1.7 of Peachtree dollars going into the loan, just together. So we all have the same risk in the deal. The one interesting thing about this transaction is that, like I mentioned, there's 2 lines. And that second line, you have high employment and rural, and this deal qualifies for both. So you have that benefit of being, two different stamps on there, where you can have rural and high employment. This is looking at 25 EB5 investors, again, about 450 jobs, so right at 14, 15 jobs per investor. So again, quite safe. Our team of EB5 folks have been in the industry for 20 plus years. Adam Marine here is here at this conference. You can meet him in the booth if you have any questions. A colleague of Wendy and Yana, who's been in our company for quite a while. So they've done in their history about $1.5 billion in total transactions. So they're very versed in the EB5 rules, regulations, programs. Adam sits on the board of IIUSA, which is the one that's leading the charge and helping with legislation and other things. So we're very active within the EB5 program. So on the non-EB5 side, just wanted to mention how we transact. So we lend money to hotels. So this is a deal that we did in Charlotte, North Carolina, where we lent money to this borrower. They bought this hotel. They bought it for about $16 million. We gave them a $10 million loan, which is it was a 1-year loan, very short term. We charged SOFR plus 850, which is 13%, which is quite a high interest rate. But the borrower needed to close in a very short period of time. So we did the deal. We're at a very protected base of $100,000 a key, which is in this market probably 50% of where the assets trade. So this hotel opened in 2009. It was renovated. We've since been paid off. And we made over about 16-17% net yield on this deal. We also bought a hotel in Austin, Texas, which is near University of Texas, near the capital. It's a great little market. Austin is a tech city. It's been growing very, very rapidly. We found this deal from a group that had to sell due to maturity and due to estate issues. So we got it for what we think is a very good deal. Our competition on this was Blackstone, and Blackstone was not able to close the transaction because they have redemption issues, so they could not transact. So we got about 15% cheaper than what Blackstone was willing to pay for it. It's a great hotel. It's just in the middle of the business district and right near the university. So just another transaction that we did on the non-EB5 side. So I guess with that, that's our company, and if there's any questions, I'm happy to answer them.
Do you have any questions? Maybe one you have. We have a mic also. You raise your hand.
So basically, what I could understand that those people were there, they would invest in your company, and then your company would invest in the real estate. And as a security, your company would have security from the companies whom you are providing the finance as a security. But what security the others, those like these buyers, would get in India from your company, because ultimately our local standing will not be there with the ultimate hotel will be with you. So what sort of security backing will you be getting on your company?
Yeah, so to answer your question, so there's two ways. So when we lend money to somebody, we have the first mortgage on the asset, right? So that's our security. Our company has a guarantee that we give to EB5 investor. Our company guarantees that in the event this deal fails, we have a guarantee to give your capital back. Same thing on the equity side. Our corporate entity backs that transaction.
So your company guarantee would be given to the And
Correct.
second, with regard to the job opportunities, once you pump in the money and the project is complete, then the job opportunities would flow to the investors, and although those some can be big, and so there would be a long gestation period.
So the construction jobs also count towards the job creation. So when you look at like the two deals that create about 450 jobs, so that includes the jobs after opening and the jobs that are created by the construction and the ancillary demand. So you need to count both when it comes to that.
So in a nutshell, those people who are buying out because of the opportunities. So these people get an opportunity of a job in construction, whatever the scenario, whatever job it is. So in US, like other professional courses, speaking language to randomly created. And then in India, you have an embargo that it is not that resource you have to basically find from that country. If you're not able to find, then you go beyond. So
Right.
is it not the case in US?
It is not the case. So we don't have to, we're not required to buy a certain amount from the US or outside of that. So yeah, we're not required to do that.
In what form the company gain investment?
I'm sorry?
In what form company is gaining security to Indian investment?
You mean our guarantee?
In what form?
It's a guarantee from our corporate entity. So it's a written guarantee for our, yeah.
How many EB5 has security?
So in our history, we've done 5 so far. We've done 700 other transactions. So, EB5 qualifies in certain of our markets. So, if it's rural, it's high employment, we think it qualifies in this expedited line. When it comes to the other transactions, they might not qualify for EB5, so that's why we've done them.
Sir, what is the eligibility criteria?
The eligibility criteria
Eligibility
for EB5,
not in US.
for EB5 in the US.
Yes.
So it's an $800,000 investment in rural and in the high employment areas. So it's $800,000 of investment. Its time period is roughly, call it.
Eligible. Who is eligible?
Who is eligible?
Yes.
Indian nationals are eligible. Really anybody
And
foreign.
income criteria? Income
800,000.
Huh?
800,000.
800,000
Yes.
per annum.
No, 800,000 altogether.
नहीं eligible कौन है eligible?
Everybody's eligible. Anybody, Indian national is eligible.
नेटवर्क नहीं देखेंगे नेटवर्क कौन बैंक करेगा?
So can we take this later?
Yeah, we
please?
can come chat about it later. Okay, all right, thank you.